want to introduce the panelists. Two of them, both of them, old friends of mine. Anna Paglia, I knew for many, many years, ran ETFs at Invesco, is now Executive Vice President over at State Street, in a much bigger job than just running ETFs, although the very important critical SPDR ETF business, which is one of the cornerstones of the whole ETF business, is under her purview, but much more than that. And Mike Novogratz is the founder and CEO of Galaxy Digital. So we're talking about navigating the future of digital asset investing. There's a lot going on here, and unfortunately, Bitcoin kind of sucks all the oxygen out of the room, but crypto is much more than Bitcoin, and that's one of the things I want to get into. I am very excited about crypto. I have issues with Bitcoin, but I am very excited about crypto, and there's reasons why you should be excited about crypto, and hopefully we'll elicit why out of our two panelists. Let me just start with you, Anna. State Street is a trust bank, conservative organization, and yet here you are out here on the beach with all of us. What has enticed State Street to come to this kind of event? What are you seeking to get out of this?
Sure. So I think you're right when you say that State Street is a conservative organization, is a bank, but it's also an asset manager. And State Street, the bank, has already started this journey into digital assets with a digital assets working group, with big announcements from the last few weeks or also the last few years, priding itself of being the custodian bank for most of the Bitcoin ETFs in market right now. So launching digital assets ETFs was just part of an evolution. So it's not just a change in trend, a change in views, it's just part of an evolution, it's the evolution of that journey. I would also say that you know a good asset manager because the good asset managers are those managers that do more listening than talking. And when it comes to listening to your clients, to me, the one thing that speaks the loudest is money. Follow the money. Follow the money trend. What are clients buying? Because clients cast a vote every single day. They express their preference, they express their vote by way of asset allocation. And if you look at the numbers, just think about this for a minute. It took 3 years for SPY to cross $1 billion. It took 2 days for the first future-based Bitcoin ETF to cross $1 billion. And now, less than 1 year since the SEC opened the door to Bitcoin ETFs, we have over $50 billion into that asset class itself. So this is the loudest scream that we ever heard from clients. And you know, to me, you may love it, you may hate it, you may not have a view around it, but you cannot ignore it. So if your clients are expressing their views and allocating to digital assets, it would be a mistake not to be part of that and not to offer them tools that would allow them to manage their portfolios.
I want to talk about your new ETF products, but I want to just turn to Mike. Mike, you're damn good at following the money and following trends. I've known you for a long time. You've survived all sorts of things. What do you talk to people here. What are the RIAs telling you about crypto? Are they eager? Are they hesitant? What's the adoption rate like? Tell us what the state is here, because you're talking mostly to RIAs here. What's the adoption rate? What are their worries?
Well, what's interesting about this conference is, just walking around, the RIAs seem to be a little younger than the average, and so what I've always found is, the older you are, the harder it is for you to get your arms around this new asset class. And so what you're going to see, quite frankly, is as baby boomers slowly pass away and that money gets inherited by younger generations, you're going to see more and more crypto adoption. I thought when Charlie Munger passed away, he famously was very skeptical at crypto. And I was like, yeah, Charlie's one of the great investors of all time, and we'll mourn him, but we won't mourn the fact that his money is going to go to younger generations that are going to invest in our asset class. And so to start with, I do think it's generational. But there's been a big shift. Listen, in 2021, we had a big bull market and then a big bear market. And it really wasn't until then that institutions started kind of looking at coming back in. And so you could see this as a 4 or 5-year-old asset class from an institutional perspective. And that's young. And so most people wait and see. And that has been changing quickly, right? One of the single biggest things that happened for the crypto space was Larry Fink, from one of State Street's competitors, getting orange pilled and coming out publicly as the CEO of one of the bigger asset managers and saying, I think this should be in portfolios. The US government finally allowing the ETFs. And so you're getting this acceptance. And the fact that State Street is here today and that we've partnered with them, the fact that multiple big asset managers have ETFs or are going to be in the custody business pretty soon, as each institution enters the fray, it makes it easier and easier for people to come in, and that just gets momentum to a story that already exists. And so why now? Why now? Because we're going to have a Federal Reserve cutting interest rates, and that's going to give digital assets a tailwind, but mostly because we're going to have an election where one president has already said he will be wildly pro-crypto, and the other candidate, Vice President Harris, has already said she's going to be better than Biden was, and just stay tuned. And so I am pretty confident that the Democratic response is going to be positive. And it's not because these guys all woke up one day and said, God, we love crypto. It's because they realize there are 90 million crypto owners in America. There are only 55 million dog owners in America. And being the party that doesn't like crypto is worse than being the party that doesn't like dogs, right? These are single issue voters. People like their crypto. And I think that's where the money is.
So those of you who don't know what this reference to orange pill is, in the industry, orange pill sort of means somebody who's becoming warmer on the issue. I take it this is a riff on the Matrix, taking the blue pill or the red pill. Remember in the Matrix when Morpheus said you could take the blue pill and stay in the Matrix, or take the red pill and see reality. And so taking the orange is sort of you're in the middle. You're feeling a lot warmer than you used to. But I'm wondering how the RIAs are feeling about this. I have spoken to several hundred RIAs in the last couple years at this conference, and opinions are split about their involvements. There's a bunch of them, and they're younger, and they're generally very enthusiastic, but they have issues about recommending it to their clients. So I asked you about the penetration rate here. How are they feeling about it? There's compliance issues. There's fiduciary issues around that.
Again, we're so early in this. Like, if you think about it, it's only 7 months since the Bitcoin ETF got launched. And a lot of the big platforms need to season, like Morgan Stanley, one of the bigger platforms, only recently allowed their salesmen to start selling it. And so this is trickling out, and we're seeing it starting to accelerate. I never expected overnight every RA to be saying, you got to put this in your portfolio. But in any quantitative analysis you do on any time period, if you go back 6 months, 2 years, 5 years, if you put some percentage of your portfolio in Bitcoin or overall crypto, it's increased its returns and lowered its volatility. And so the math works, and I think the math will continue to work. Why we got it in with State Street to do these new ETFs, which are not just the straight Bitcoin ETF, but have alpha in them, is because as the volatility of the space comes down, we think the client base is going to want to have access to those products.
But that's part of the problem, Anna, the volatility. I mean, that's part of the fiduciary responsibility. You're going to recommend a product that's that volatile at this point. How do you sort of make the RIA community more comfortable with this? And by the way, Mike was referencing Morgan Stanley. They just allowed 2 Bitcoin ETFs to trade on their platform, right? The Fidelity and I forget the other one.
Yeah.
But in the last couple of weeks. So that was a big breakthrough that Morgan Stanley would allow that on their platforms. But go ahead.
Yeah, so Bob, since we talked about movies before, I also have a movie reference here because over the weekend, my boys asked me to watch Avengers Endgame. I don't know if you watched that. I don't know if anybody has watched that. But there is a point in the movie where the villain, the big guy, Thanos, Stados, whatever the name is, he looks at Captain America and says, you think I'm the bad guy. I'm not the bad guy. I am simply inevitable. So it got me thinking about crypto and Bitcoin ETFs. Yeah, I know, my weekend is on fire. So the reason why I drew the connection in my head is because if you are an RIA, whether you love it or you hate it, it doesn't matter. That conversation is inevitable because your clients have either come to you or will come to you to ask you about digital assets, to ask you about cryptocurrencies. And you are going to have a view. It's inevitable. But I will also tell you something else that is inevitable. That view is going to be wrong. If you love cryptocurrencies, you are going to find yourself at some point in this high volatile environment or in a crypto winter. Your client is going to come to you and say, you were wrong. You don't know what you're talking about. I lost a lot of money. Likewise, if you hate it, and we are going to be in an environment like the last few months where Bitcoins are killing it, your client is going to come to you and say, you were wrong. I didn't make it. My portfolio is underperforming because you were wrong. So it doesn't matter whether you like it or hate it. You must have a view. And you must know how to place these asset classes into a client portfolio. Because that conversation is happening. And if you have not had it, well, brace yourself, fasten your seatbelt. It's inevitable.
But saying it's inevitable doesn't mean it's not an allocation. So this is the way Wall Street works. Folks, just put 1% in. That's all you got to do. Just put 1% in. So if you put 1% in, look, it's great. So what? So let's assume it blows up. It all goes away. You lose 1%. It doesn't matter. But generally, long term, Bitcoin has tended to go up. So the chances are you could get to 2% next year. And then in 2 more years, Wall Street will come to you and say, you know, your asset allocation should be 5%. And they did this with gold. This is one of the great things. Everybody usually has 5% asset allocation in gold. But remember, it doesn't, just because it's inevitable doesn't mean that all of a sudden we're going to adopt it as a new asset class. And I think that's my question. Has it proven a use case? And part of the problem I have is that Bitcoin takes all the oxygen out of the room. And in a sense, crypto is a lot more interesting and exciting. So maybe we can talk about that a little. But first, Anna, I just want you to sort of explain. You've got a new relationship with Galaxy. You've got 3 ETFs you are launching in the crypto space. Mike is the sub-advisor. Tell us a little bit about what that is.
Yeah, I think that this story fits really well in what you said, which is Bitcoin sucks all the air out of the energy. But there is a value chain, there is an industry, there is an ecosystem associated with digital assets that is more than Bitcoin. Is artificial intelligence, is a blockchain technology, is the entire industry that revolves around the cryptocurrencies. So when we started talking about entering the digital asset space with our products, we were very clear with, listen, State Street is a company with no ego. So when it comes to product development, you have to leave your ego at the door. You are not going to be great at everything. And it was very clear to us that to do this right, we had to partner. We believe in the value of partnerships. And partnering with a crypto native, to us, was the only way to unlock this opportunity. So we looked at the market. Bitcoin ETFs are in market already. Bringing in Bitcoin number 13, 14, 15, not exciting. But looking at digital assets version 2.0, that was the exciting thing for us. So how do you put together the capabilities and the experience and knowledge of a crypto native into an ETF, into asset management? So we launched these products that are active strategies. One of them is really about technology, but it's called the TechX. It's not just technology and growth, but it's a very intelligent allocation across the different industries that may appreciate or depreciate as the asset evolves. We brought other 2 products. One is really focused on crypto, the crypto industry. And the other one is a hedged version of that. If you like Bitcoin, if you like crypto cryptocurrencies, but you hate the volatility. There is a way for you to participate in the industry with a volatility hedge. So to us, again, that partnership and that suites, and these are just options. We give investors options to participate in the upstream of that industry. We give our clients an opportunity to provide their clients with those options without having to ask yourself, what happens if Bitcoin goes over here or Bitcoin goes
And these
over
three launched last week, am I right? Okay,
Yeah.
great. I want to just expand it out a little bit and talk about crypto X Bitcoin, because I have issues with Bitcoin and use case of Bitcoin, but I am extremely excited about blockchain. I am extremely excited about smart contracts, because if you just think of the logical possibilities here, it could change the world. It will, if it fulfills its promises, it will dramatically reduce financial friction. And if you think that's some kind of fancy word for making companies more profitable, it's not. A lot that happens in the world takes a ridiculous amount of time to get done. To buy a house, even stock settlement, even transferring money from your bank account to a friend in London takes an awful lot of time. And there's intermediaries who get in between who charge a hell of a lot of money to do these things. Blockchain offers the promise to change a lot of that. So, Mike, one of the things that to me is revolutionary, and with all the issues I've had about Bitcoin, blockchain does allow a kind of direct transfer of ownership to me. I don't want to sound too high-level philosophical, but can you explain why that's really important? Because to me, that's sort of the broad concept here.
Sure. So when you think about what Satoshi Nakamoto, who wrote the Bitcoin white paper, deserves his Nobel Prize for, it was solving a problem called the double spend problem, which meant before Satoshi, before 2009 at the white paper, you couldn't have a digital signature on the internet that wasn't counterfeitable, right? So if I put something on the internet, you could control, copy, paste, and have 100 of them. And so how would you create digital scarcity? And so with Bitcoin, with the Bitcoin blockchain and then Bitcoin, the token, he created the first digital signature that you couldn't counterfeit. So that was private property on the internet for the first time. Before Satoshi, there was no private property on the internet. And I like to say, you know, John Locke says there's no capitalism without private property, 1689. George Washington said there's no freedom without private property. If you look at emerging market growth, the moment there are property rights in an emerging market, you start seeing economic growth. And so this idea of private property, of something that is mine and not yours, is really important. And private property that I can then transfer. In Bitcoin's case, it was money, or it became digital gold, but it could be NFTs, it could be healthcare records, it could be the title to your house, it could be appointments at a restaurant, right? Reservations at a restaurant, it could be tickets. And so what blockchains are databases. Think of a giant Microsoft Excel spreadsheet that instead of one person controlling the database, a community controls the database. And the database is governed by a set of rules, a constitution. And so right now we have the Bitcoin database, the Ethereum database, Solana database, and all these databases. What they are selling is block space. They're selling is portions of the database to then build ecosystems on top of. Like, that's the real promise, that one day we will have peer-to-peer music. Well, artists will directly sell and transact with their fans without paying the big middleman, right? Peer-to-peer banking, peer-to-peer tickets, where concert goers will have tickets, and when they want to sell them, they're not selling them through some broker, they're transferring them directly. And so we haven't seen huge adoption in those cases yet. It took a while for blockchains to be fast enough, trusted enough to be able to process, and decentralized enough, but we're getting there. And so when I think of crypto in general, we've got Bitcoin as digital gold. We've got payments, which is one area which is exploding overseas, right? Most of the payments are coming in a tokenized version of the dollar. We call them stable coins. One is called USDC, one is called dollar tether, but they are broadly dollars tokenized. And last year alone, they did more volume than Visa plus MasterCard combined. And so it's not a small industry anymore. Those run on blockchains. And so when they run on blockchains, the blockchain accrues value, processing fees in essence. Soon to come, and we're starting to see experiments in it, is tokenization. At one point, your stocks will be tokenized, your investments in your funds will be tokenized, private equity funds will be tokenized. We tokenized the Stradivarius, a 200-year, $9 million violin that we tokenized. And so that is coming. And so we're going to start seeing digital assets permeate the space. And when I think about the growth of AI, right, the one thing that AI is doing is it's centralizing, right? It's these giant databases with these large models. The yin or the yang to the yin of AI has to be blockchains. Blockchains decentralize and authenticate. And so you're going to see a ballet between AI users and blockchains. How are you going to prove something's not a deep fake? You're going to do it because it's going to be authenticated on a blockchain. How are you going to move money between computers? Your AI agent who's going to shop for you is probably not going to send money through the MasterCard interchange. That money is probably going to be some form of crypto money that is going computer to computer. So when we look into the future, it is almost inevitable, using Anna's word, that money transfer is going to be happening in digital money, right? And so crypto is tailor-made for that. And so we're going to go from a narrative business in time, right, telling the story of why Bitcoin's important, to a plumbing business where it's financial market plumbing, it's regulatory plumbing, and it allows a platform for communities to really disintermediate the existing rent takers.
Did you want to say something? Good.
Yeah, I think, what reminds me is, I think my colleagues have heard me say this already, which is, the key word here is convergence. Everybody, I'm sure, everybody has had the iPhone moment. If you had the iPhone moment, you remember that. You opened the box, you looked at the machine, and then you went, oh my goodness, there is a Safari icon. I can actually click that icon. I don't have to wait for a signal. I'm online. I can talk, I can listen to music, I can surf the web, and I can do everything with one single device. And if people are as old as I am, I still remember those days where the phone was in a room attached to a wall. I listened to the radio in another room. I watched TV in another room. Now the fact that you have everything in one single device, that was the revolution. That was the iPhone moment. The iPhone moment has not arrived yet in the financial industry, in banking. We transact with a number of intermediaries in between. We have banking account, we have a brokerage account, more than one brokerage account, we have a saving account, we have a 401k account. That convergence has not happened yet. But blockchain technology and the future of the financial industry is going to be when we will be able to have that one single frictionless moment, the iPhone moment for financial industries.
So you see why this is so exciting and why it's frustrating to me as a reporter when basically, and we're part of the problem too, the financial media, Bitcoin sucks up all the oxygen in the room. But you heard what Mike was saying. Mike gave a very good riff there about the potential of the blockchain in general. And it is truly revolutionary. I want to ask you about the regulatory situation here. President Trump, former President Trump, has sort of basically been all in on crypto. I think Vice President Harris has, is it fair to say, taken the orange pill? I mean, is she a little more warm on this? Where are we
We
here?
will see. They've already come out and said they're going to be pro-crypto, but that's all they've said. And so the devil will be in the details. and I think they're having a lot of meetings right now to try to understand what crypto policy should be. When they talk to Senator Schumer, who runs the Senate, he will tell them it's time to pass bipartisan crypto legislation. When they talk to Hakeem Jeffries, who runs the House, or hopes to run the House, they will say it's time to pass crypto legislation. And so the Democratic Congress has gotten there. There had been one senator, Elizabeth Warren, who really stood in the way of crypto, and she had a lot of sway in the Biden administration. She will not have as much sway in a Harris administration. And so I think either president that we get, it's going to be a lot better than it's been.
Well, that's the key point. That's the key point right there. Either way, we are moving towards broader legislation. Do you think either way, there's a chance new legislation will be enacted?
Yeah, and what's interesting is, you know, I've spent a lot of time in D.C. in the last 8 months, and there are only 3 or 4 things that D.C. needs to do. It needs to pass a stablecoin bill. It needs to pass a bill that determines what the CFTC gets to regulate and what the SFC gets to regulate. It has to tell the OCC to allow banks like Citibank or Goldman Sachs, to own crypto on their balance sheet. And that's it. And then we're off to the races. And I think you'll see a tremendous rush from traditional players into the space, which will bring more capital into the space. And so it feels like we're at the beginning of a much easier time to want to invest in crypto without feeling like the rug got pulled under you.
I want to move on a little and ask about what's going on internationally. Can you sort of give us an update of the state of play in Europe? China has crushed the Bitcoin business, as far as I can see. Just give us a high-level, view of what's going on internationally.
So here's an interesting factoid. Every single country that has banned Bitcoin has come back to unban it within 3 years. Interesting. You know, the countries want to control their citizens, and they have a hard time doing it because this is a peer-to-peer asset, and it becomes very popular. And they were like, if you can't beat them, join them. And so crypto is literally almost a human right in the developing world. When you look at countries like Venezuela, who had, almost infinite inflation, or Turkey. Turkey had been a darling of the emerging markets 10 years ago, and they had 110 and 110% inflation back to back. Think about what that does to your client's savings if the U.S. got to those kind of inflation rate. In 1 to 2 years, you're wiped out. And so you're seeing digital assets, either stable coins or Bitcoin, being bought in all those places, from Iran to Turkey to all over Africa. And so as a store of wealth, you're seeing a lot of adoption, but also as a payment system. And so every worker in the Mideast who's sending their money back to Pakistan or India or Bangladesh is now trying to do so using a blockchain. Most of them take a dollar stable coin called Tether and send it over a blockchain to the people at home. The Russians that all poured into Abu Dhabi and Dubai during this Ukrainian war all came with tons of crypto and have been buying apartments in Abu Dhabi in dollar stable coins. And so as a means of transaction and kind of as a way of life, crypto is far, far more important overseas than the US. Now, some of that is because, like, Apple Pay works pretty damn good. And so for most of us, we have access to the financial markets and the payment system is pretty good. But not for all of us, right? Like, at the bottom of the pyramid in America, we still have a tremendous amount of people unbanked. Last year alone, there were $8 billion in overdraft charges. That's the big banks charging people for bouncing checks. At JP Morgan, I've checked recently what they're paying on savings accounts, and it's 1 basis point or 5 basis points, right? You're getting the entire 5% interest rate is all being taken by the banks, both in checking and savings. Crypto fixes that. And so when you think about it being progressive, it's unbelievably progressive to the little guy. And so because we don't have as many people in America in that zone, we don't focus on it as much as you do overseas, but there's certainly plenty that could benefit from it.
I want to just move on to security and traceability here. Obviously, if you go to this level that we're talking about, where essentially your entire life, not just your digital life, but your life moves on to a platform like this, a crypto platform, there has to be complete confidence in the security of it. Can you talk a little bit about the security protocols? How I know they play up a lot about how secure it is, but are the security protocols really sufficient for it at this point? How confident do you feel?
Yeah. So listen, for a protocol like Bitcoin or Ethereum that's been around for a while, they are so battle tested. It's virtually impossible that you could get that the blockchains themselves could get hacked. That doesn't mean if you have your Bitcoin sitting at a centralized exchange that doesn't have good security themselves, they couldn't lose your money. For new ideas, like some of the brand new blockchains that get spun up, there is smart contract risk, and you usually get paid for that. And so while what the benefit of something like the State Street ETFs does is it's taking kind of that frontier risk away and saying, hey, we're going to invest in things that are established, that we understand, and that we know. And I think that makes sense for all but what we call the degenerates, the degens, the real crypto frontier people. There's still risk in some of the new protocols. But for Bitcoin, Ethereum, Solana, they've gone through so many iterations that there's virtually zero risk. What's interesting is crypto for bad use cases. We hired a guy who had been at the CIA for his entire career to do a study on this. Law enforcement likes Bitcoin because it's all on a blockchain. And so while there's certainly been bad uses of crypto in the world, just like there have been bad uses of dollars, it's easier to track that money on a blockchain than it's not, because it's all public. And so the debate left is, how do where do governments deserve or get a right to look at who's doing what?
So how do you get around that? And I mean, Mike brings up a good point. People used to think, oh, we can launder money through Bitcoin. It's a giant money laundering operation. And yet, as Mike said, law enforcement can get access to Bitcoin because of the traceability around it. Again, here's a very conservative bank here that's, while you may not be in the crypto business, you're putting your toe into the crypto business. Do you feel confident that crypto has enough security protocols for you to get more involved in that business?
Well, we are not going to get involved in the security protocols, but what gives us comfort is the evolution and the regulation that continues to get their arms around these new systems. It's not a coincidence that today you are only allowed to have certain cryptocurrencies into an ETF and not others. So our government now is comfortable with Bitcoin, is comfortable with Ethereum, because these currencies, first of all, they have a futures market that really regulates the pricing, which means there are less opportunities for bad actors to manipulate the price of these cryptocurrencies. And then regulation is evolving. This is still uncharted, under-regulated territory as compared to other asset classes, but it's maturing. So that level of maturity is really what makes us more comfortable about engaging in this conversation.
So I want to take a couple questions and talk about what's the next steps here. But Mike and Anna, several questions here about how to talk to clients about this. What's the best way to explain Bitcoin and crypto needs in terms of allocation to high net worth clients? Should Bitcoin crypto be explained to high net worth clients as a hedge against the future of the U.S. dollar? These questions, a whole bunch of them here. Basically, how do you talk to high net worth clients? What is it when they ask, what am I doing? What is it?
Let me take that and let me address kind of your skepticism, because there's a lot of people like you. Jamie Dimon has talked about being skeptical. Elizabeth Warren has talked about, I don't see value in crypto. What I always say to them is, that's okay, But let me tell you, the richest woman in Massachusetts, Abby Johnson, sees a lot of value in crypto. The richest man in Pennsylvania, Jeff Yass, who runs Susquehanna, sees a lot of value in crypto. The CEO of Fortress, Pete Brigger, runs one of the best credit funds, very conservative, sees a lot of value in crypto. Stan Druckenmiller, maybe the greatest hedge fund investor of my lifetime, sees a lot of value in crypto. And so when I think about what Bitcoin is, and those guys I was specifically talking about Bitcoin, there is a growing group of people that see Bitcoin as an alternative to gold, or at least supplements gold. It's digital gold. And while Bob might not be there yet, or Elizabeth Warren isn't, that's okay. There are more and more people every day that are seeing value in it. There just are. And so it's almost hubris to say, because I don't see value, there isn't value. I was like, Elizabeth, who do you think you are? Like the judge? Like you're smarter than the rest of those people? You don't have to participate. But what I'm seeing is more and more people participate. And it's a pretty easy sale. The only reason you shouldn't be long gold in your portfolio, in your client's portfolio, or silver or Bitcoin, is if you think the US government is going to get its act together and our deficits are going to go lower, not higher, and our debt to GDP is going to go lower, not higher. If you believe, like I believe, that either Republicans or Democrats are going to keep spending willy-nilly, and that Medicare and Social Security spending is going to keep running until there's a crisis, the dollar will devalue against these assets, against equities, against gold, against silver, against Bitcoin. And that's the narrative. And I don't think that's changing.
But that's the argument of the high net worth clients. You think it's essentially a hedge against excessive government spending to a large
Yes.
extent.
Yes. If you really believe the government's going to become unbelievably responsible, don't buy Bitcoin.
But I would also add something else, which is, and by the way, I see you, I read your body language. You are becoming a believer, Bob. Come on. Slowly.
Bob's buying Bitcoin tonight. He's waiting at me.
Slowly. But I would say we have witnessed in the last couple of years something that we have not seen in decades, and that is the 60-40 portfolio doesn't work anymore. So we are really walking into a new, it's not a revolution, it's probably an evolution of financial markets where you have to think about the portfolio allocation of your clients, not in the traditional 60-40. We are witnessing the creation and the growth of a brand new asset class. Why would I want that to be incorporated in your clients' portfolios? I mean, obviously you have to be thoughtful. Obviously you need to know how to deploy these capabilities. You need to know how to deploy this asset class in a client portfolio. You need to know the risk tolerance and the goals that your clients want to achieve. But it is a tool in your toolkit. Whether you decide to deploy it or not is up to you, but it's definitely a tool that you need to be mindful about.
I'm getting some questions about Bitcoin prices. Mike, you probably get this more than any other question, but there are some crazy Bitcoin predictions out there. Where do you see the price of Bitcoin in 5 to 10 years? That's a long way off. I'd be impressed if you take out 1 year from now, but if you want to go ahead.
Listen, I think there's no reason Bitcoin can't be as big as gold in 10 years' time, right? And so I think the market cap of gold is now 13 or 14 trillion, right? The market cap of Bitcoin at whatever we are, 60 times, is 1.2 trillion. And so Bitcoin could be 10 times bigger if gold stayed the same, which would make Bitcoin 500,000 a coin. That it sounds, oh my God, how can I get to 500,000 other coin? But like, again, as I see the generational shift, there's not a young kid I know under 30 that owns gold. Not one. And they all own Bitcoin. And I own both, but I'm turning 60 next month. and again, there are not many 80-year-olds I know that are market people that don't want to own some gold that own any Bitcoin. And so I just see this generational shift. I think gold could be a lot higher. I think gold will go to 3,000 in the next 12 months. And it could be 10,000 unless our governments get our act together. And I kind of think we're beyond the point of saving the governments.
So what's the next catalyst? I'm looking out there. I cover IPOs, which have been depressing business in the last 3 years. And is there anything out there that could ignite even more, other than the election, more interest? I mean, there's a couple of this Circle out there, Kraken. I don't know. There's some IPOs
Yeah, listen,
potential.
the SEC has been brutal under the Biden administration. We have been trying to get public for 3.5 years. Not having access to the U.S. capital markets has cost my company a fortune. It's cost Circle. It's cost Kraken. There are 10 to 15 companies lined up, ready to go public as soon as either Gary Gensler or the next head of the SEC lets us. And I think you're going to see a wave of crypto IPOs coming soon. You know, I pray soon as this side of December. I think this soon will be next side of December, post-election, no matter who wins. That's good for this ETF we did because it's going to be investing in a lot of crypto equities. It's good for the overall industry because it will bring lots of capital into the space.
Well, you can, I guess the point of this whole discussion here, which has been fantastic, is you can like or not like Bitcoin, or you can like or not like the blockchain, but as Anna said, it's inevitable. And like it or don't like it, the one thing you really can't afford to do is not pay any attention to it. And that has been my position. I have been studying this for years and years now, and I see things that I don't like, but I see an awful lot of things that I do like. So put me in the orange camp on this and getting warmer, I guess. There's going to be some amazing things happen in the next few years because we're going to move way past Bitcoin. We're going to get into the implementation phase of blockchain, of much more interesting things, of what Mike was talking about. That is truly, truly exciting. Anna and Mike, thanks very much for joining us. Thank you all for coming, and thanks for coming out to Future Proof. Really appreciate it.